Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open. What's going on today? Well, the market's in rally mode. Dow's up about 500. Nasdaq's up about 350. We're off to the races. So what did I do today? Well, I took half my position off in the SPY. Now, why did I take half of it off? All right. So I bought it down here at the 50-week moving average because I thought we would bounce. And we got that bounce. We bounced up 20 points on the SPY. We went from 348 to 368. That's a good move. But the reason I took it off is because the VIX. The VIX, when I bought that, it was telling me to go long. Now, right now, it's telling me that it's kind of flattened out. I still think we got more of the upside, but I'm not sure the bottom's in yet. I think we could actually pull back and make a lower bottom here. Now, I'm looking for a tradable bottom. This is what I call a short-term bottom. Look, I believe like all of you believe. I mean, this market's overpriced. Eventually, it's going to come down a lot more than it is. But historically, going into a midterm election or any election, the stock market tends to rally going into the election. It tends to rally from the end of October into the November election. That's just the direction that it goes. Now, we could still come and take out the low this week. We could make a new bottom this week and then rally from there. I'm not sure. We're pushing up against the 20-day moving average, right? So we were down here. I bought it at the 50-week moving average, and now we rallied up to this 20-day moving average. Now, if we get through that 20-day moving average, I think it can be off to the races. But I'm still not sure we're out of the woods. We may come back down and retest that low. I mean, Thursday of last week is where we made that low, right? That's only a couple days ago, a couple trading days. But that low was made kind of a capitulation, and we took off higher, but we gave a lot of that up. On Friday. We gave most of it back, but now we're rallying again today, pushing up again against the 20-day moving average. Now, I do think that eventually we'll get through that, but we may pull back first. So I took half my position off. Always good to take some off when you got a nice little profit going. Okay, so let's move over to the real estate market. Now, over the weekend, I love to read, I like to read the articles that come out, and sometimes I get behind. So I was reading one that had the headline that institutional investors are buying houses in bulk. They're buying in bulk, right? Meaning they're buying like 10, 20, 30 at a time. That's what the headline says. But if you read the article, that's not what the article says. The article says that there was, that a company, Kinloch Partners, they were offered the properties in bulk. It didn't say they were buying them in bulk. As a matter of fact, they said they're not buying them because there was too much product on the marketplace. Too many home builders are reaching out to them. They're reaching out to them and they're offering them 20% off if they buy in bulk. But you don't need to buy in bulk. If you want to go to these home builders and make an offer 20% off, they're probably going to take it. Matter of fact, I just saw an email from Lennar. Lennar, they weren't saying 20% off. They're saying, please come bring us an offer. Well, we probably will accept it. Now, that's just frightening to me, especially if I'm one of the owners that already bought in that complex, right? Say you were an owner and you just paid $1 million. Now they've reduced it 20% down to $800,000. And now they're sending out emails to real estate brokers like myself saying, bring us any offer because we have to get rid of these homes. Now, I think Lennar's one of the smarter ones because they know what's going on. They know they have to get rid of the homes before the homes go lower. And they're also in the business of building homes, and they can't build more homes until they get their money out of these homes. You see, they use short-term financing. But if you've seen my inbox of being a real estate broker, all real estate brokers get these emails. They get them from builders offering property deals to bring us a buyer, because they don't have any buyers anymore. Before, they just used to set the price. You come in with an offer and they won't even look at your offer if it's below the price they want. They just go, no, we don't look at offers. Now they're sending emails saying, please bring us an offer. I'm telling you, the market's changing and it's changing quickly. All right, so anyways, not just the home builders are reaching out to me, the lenders are desperate. They have no business, so they got to reach out to somebody. Why not reach out to the real estate broker? The offers that they're making, hey, we'll buy down that rate for your client. We'll buy it down. We just need to make some loans to stay in business. Please help us. Please bring your client to us. We'll buy down the interest rate. We know the mortgage rate's above 7%, but we'll buy it down as low as 3.95. We'll buy it down. We'll buy it down for them. We'll work something out with you. Please bring us a buyer. Bring us the business, Mike. Come on. We don't have the business. I mean, my email box is just filled with these. And now another article I read over the weekend. All right. So actually, it was just this morning now that I think about it. Bank of America. Now, they came out and they said that their profit dropped. Now, that didn't shock me at all that their profit dropped, right? But the reason that their profit dropped, that they're actually admitting this, let me get the quote here. I want to get the quote right. All right. They said their profit dropped because they had to set aside funds to cover soured loans from potential deterioration. Now, let me give you what that really means. People are not paying their mortgages and our loans are going bad. So they set aside funds because they're going to have to foreclose on these bad loans. And then once again, they're asking me to come on board with them, right? A lot of the banks have reached out to me saying, Mike, we're taking back these properties already. Now, it's surprising to me that they're already taking them back because most people have equity in the property. The property went up, but when you only put in 5% down on a loan and the houses have already dropped 10, 15, 20%, they're already underwater, right? I mean, so they're going out and they're foreclosing on these and they're contacting the real estate brokers now saying, hey, will you take these houses and sell them for us? Will you get onboarded with us? Get in our system so you know how we work and we know how you work. Look, back in the subprime mess, I mean, we were doing a lot of what was called short sales. Now, they weren't foreclosures per se. They were people not paying their mortgages and they were just giving the keys back to the bank, but the bank saying, no, give them to the loan, the broker, the real estate broker, and he will sell it for below what we own on the property. So let's say just numbers. Okay, $1 million property. Anyways, they give you a $900,000 loan, and that property is only worth $800,000 right now. That's what I can get it sold for. So they're taking a $100,000 hit. That's known as the short sale. And this is starting to go on again because we learned nothing from this subprime mess. We're doing it all over again. We're putting those 5% loans out there. Now, a 5% loan is not a very safe loan. Now, here's what's funny. Back in the old days, okay, I never made enough money to qualify really for the loans. A lot of my money would come in all at once and then it wouldn't come in, and I couldn't get the money to qualify for a loan. So what we did back then, if you put 20% down, just 20% down, you didn't have to qualify. As long as you were breathing, as long as you had breath in your lungs, you could go in with 20% down on any property and you could get the loan. And it worked well. These loans were never foreclosed upon because why? Because the person's not going to lose that 20%. Look, at $1 million house, I come in with $200,000 down. Now, some of these loans did go into foreclosure, but these were much safer loans than if you buying that $1 million house and you're putting only $50,000 down, yet they getting the loan for $950,000. About 90% of those loans were going into foreclosure in the subprime mess. This is back in the subprime mess. But the ones where they put the 20% down, very few of those loans went into the foreclosure process. I think that they should go back to those loans. Now, look, now they do have the 20% loan, but they make you qualify for the loan. Look, if you're putting 5% down, I mean, they should be checking everything. They should be checking your job. They should be calling your boss, hey, is he going to be working there next year? And the boss, they don't know because we got this thing, a recession coming. And recession's got a lot of layoffs. So people are getting laid off, right? So boss doesn't know if you're going to be there next year. And you only got 5% down. You don't have any savings because all your savings went for the down payment. But now if you're putting 20% down, the bank is more protected. Those loans are safer. I feel that they should go back to the no qualifying, 20% down, put the 20, make it 25% down. 25% down, no qualifying. Those loans are safe for the bank. But right now the bank's been making the mistake again with the 5% down, and then the equity gets wiped out. They may not even lose their job. Their equity gets wiped out, so they give it back to the bank. The banks are now worried, and that's why B of A set aside funds to cover soured loans. A lot of more loans are going to be soured in the next year. 2023 is not going to be a good year for the real estate market. It's going to be a very tough year. There's going to be a lot of deterioration on their loans. Anyways, as a matter of fact, they're all going to be deteriorating because the equity is going to be dropping. When the equity drops, a lot of times the banks, they don't know what to do. They don't want to foreclose because when they foreclose, they still have to sell it at a loss. So they just trying to get out of this mess. They're trying to get ahead of it this time. In the subprime, they waited till these were all underwater, and then they're going, oh my goodness. And we started doing the short sales. They started the foreclosure process. I mean, it was just a mess. And it's going to be much worse than that this time. Now, people don't believe me when I say it's going to be much worse than that. But the reason it's going to be much worse than that is because the bubble is so much bigger. Look at, we printed the trillions and trillions of dollars. This is just since the subprime mess, right? Is where we printed all of this money. It's okay. Since the subprime mess, the feds have bought 3 trillion with a T dollars worth of mortgages. We didn't have that in the subprime mess. Now we got $3 trillion. They don't know how to get rid of it off their books because nobody wants to buy it. Nobody wants to buy these loans because these loans are going to start to be underwater. Now, is the Federal Reserve going to be the ones that go and foreclose on these properties? Maybe they will. Maybe just not let people get away with not paying. I'm not really sure what they're going to do, but believe me, it's a mess. We're in the first or second inning. Prices are going to go much lower, and 2023 is not going to be a pretty picture. Once again, these are just my opinions. That's just what I think. Now, you may think that, of course, in your area, they only go up, and that's fine. But there's a problem out there in the real estate market, and we just saw it from the B of A earnings. Their report came out. Soured loans. Look, it's a big problem. Not in your area, but most areas, they're coming down. I'm Tall Mike. If you like this stuff, give me the thumbs up. Hit that subscribe button. Why not? Why not give me that thumbs up? It's a Monday. Get out there, everybody. Have a great Monday. I got some good stuff coming up later in the week. You want to subscribe? Bye-bye now.